You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 5th day of December, 2019. Thanks so much for tuning in. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you cannot see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, not to worry. Point any internet-connected browser to cfrn.net/live, and there you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay. I had a message in the chat box here earlier that there was no audio. Somebody gave me some feedback. do you now have audio? Yes, very much. Thank you very much, Tim. Appreciate that. Okay, guys, let's do this. Let's get a chart up of the S&P 500 Emini Futures. Let us go initially to our daily chart. Okay. Now, I'm going to remove all the drawing objects, and I'm going to walk you through what each one is and why it is important. We trade around the clock. We begin Sunday evening, 6 p.m. Eastern, and because we're trading futures and not equities, we keep the pedal to the metal all the way up until Friday afternoon, 5 p.m. Eastern. Each day from 9:30 a.m. to 11:30 a.m. Eastern, every trading day, our live training room is open. There you'll find Michael and Valerie and Bert and occasionally myself. That is where you learn our core methodology. We're taking a big picture look right now at the daily chart. As we drill down from the daily to the 30-minute to the range chart that we use in the live training room for the purposes of training you in our methodology, teaching you how to read the indicators, how to spot the setups. You're going to see how it comes together throughout today's broadcast, okay? Because if you're watching the radio show and you see these bigger picture type trades that often last for hours, sometimes even days, there may be a disconnect. Well, the guy that's teaching me in the morning, he's using a range chart, which is very quick. The reason for that, we only have 2 hours in the room each day of live instruction. Michael's goal is to show you as many trade setups as possible during those 2 hours. It's also why he uses 5 different markets, 5 different charts. Well, there's a couple reasons. One of the reasons is that everything we do, and you're going to see that in today's show, everything we do is fluid across all markets and all time frames. The markets themselves are fractal in nature. What our indicators do when we unleash them on any market, any time frame, their job is to go in, find the underlying rhythm of that market in that time frame, highlight it for you so that you can then drop to that smaller time frame, execute the trades as we've taught you with high probability, minimal risk. Okay? Now, where is this retracement taking us? Let's put some Fibonacci retracements up for starters. Every trading platform comes with this indicator. You don't have to pay $20,000 for specialized Fibonacci software. I can teach you how to do everything that software does with the free software included in this platform. So right off the bat, I'm going to save you 20 grand. Okay? All right. From the swing low that we put in on October 3rd to the most recent all-time historic swing high in the S&P 500 Emini Futures put in on December 2nd. The 24% Fibonacci retracement, that is the shallowest possible Fibonacci retracement. We've already touched it. This pullback, we said on the pullback, which we've been anticipating, the shallowest retracement would be to the BBC, that is the green line. Now that simply stands for bull bear cross. Got to call things something. When we're above that green line, we anticipate higher prices. When we're below it, we anticipate lower prices. That may seem very elementary, very simple, good, because everything that we do is simple by design. So what happens next? I explained that yesterday. As we were building the green candle, up above the red and blue line, which is called the CFMA1. Again, you have to give everything a label so you can reference it. I said we'll get a bounce. The high probability move is a bounce up to the CFMA1, red and falling. You see, when price approaches a BBC on any time frame from above, we expect that to be good support until proven otherwise. Good support sends the market higher until it runs into resistance represented by red and falling. Now what's the next high probability move? We go from support to resistance, back to support. We're going to look at all of this on smaller time frames so you'll be able to see everything very clearly and up close. This bounce that has taken us up to red and falling, again, that represents resistance. So that's an obstacle to higher prices. If the market can get through 31.23, that opens the door to go and challenge the all-time historic high at 31.58. If in fact sellers are more financially committed to their positions than buyers are, we're going to come down through the BBC. We're going to challenge these swing lows. If we can take out this obstacle, then what happens is we're headed for the 50 or the 38% Fibonacci retracement, followed by the 50%. Now the 50% Fibonacci retracement really has my eye for a couple reasons, not just because it's the 50, but if I connect this swing high, which at one point was an all-time historic high, if I connect that swing high to that swing high and pull it across, we know that what was once support quite often becomes good resistance, and vice versa. Let me shrink this chart up a little bit and I'll add a little more to that idea. At one point in time, this was an all-time historic high. This became the new all-time historic high. We failed to put in a higher high here, which led to the sell-off. We had a bullish cross. We anticipate higher prices. Off we go. We made it through resistance. This time, it held, it held, it held, it held. This time we sailed through it. So as we come back down, now we will look for that to be good support, which should give us a very nice bounce to the upside. I'm going to pause there with the big picture. Right now, I'm going to give you the numbers from around the world, and then we'll go to Michael. We'll get a recap of everything that happened in the live training room this morning. Today is Thursday, Dr. Tom Day. We'll be talking with him later in the show. John will be joining us shortly after Michael's recap. And of course, I will be giving you a complete recap today of all the Concierge Trade Alerts from last night, all the Logic 247 alerts for the entire week. Okay, starting with cash markets here in the U.S. Currently the Dow down 46 points, NASDAQ down 7, S&P 500 down 2, and the Russell dancing to the beat of a different drummer, showing a positive gain on the session, up 2.5 points. In the commodity basket, crude oil up 17 cents, trading 58.60 last. Gold up $3.50, trading 14.8370 last. In the Asian markets at the close today, Nikkei posted a gain of 164 points. Shanghai posted a gain of 21. The Hang Seng added 154. And in European markets at the close, FTSE dropped 50, the DAX dropped 85, the CAC posted a gain of almost 2 points. We have no movers or shakers today in global markets. What we do have is a green day in Asia, a mixed day in the UK, and because of the Russell, we still have a mixed day so far here in the US of A. Michael, if you're ready, take it away, and I'll be here when you're done. Michael, are you there? All right, we seem to have lost Michael in the process here. So, Valerie, have you heard from Michael?
No, I haven't.
Would that be him, or was that you?
That's me.
That was you, okay. All right, guys, then let's do this. Let's jump. You know what? I got a little bit of news for you. Let's do that, and then Michael's running a few minutes late. And this is big news. Almost $9 billion of Bitcoin has been moved on-chain in the course of 1 hour. This is a record. Yesterday, $8.9 billion, and that's B as in billion, 8.9 billion in Bitcoin was moved onto the blockchain in a single hour, excluding change volume, which is Bitcoin that returns to the sender. Bitcoin's high transaction volume was pointed out by Raphael Schultz-Kraft, the co-founder of on-chain market intelligence from Glassnode. In a tweet December 4th, he claimed that such a high hourly transaction value was a first for the network. Now, Schultz-Kraft's company apparently soon started work to uncover who or what was the reason for the unusual volume spike. Earlier today, December 5th, Glassnode posted on Twitter claims that the spike was caused by cryptocurrency exchange Bittrex moving a large amount of Bitcoin multiple times. According to the tweet, the exchange performed 21 on-chain transactions within 1 hour, each of which moved around 56,000 Bitcoin, nearly $416 million US, for a fee of about 60 cents US. The tweet also contained a link to data pertaining to the first of those transactions. Now, interestingly, the transactions took place ahead of the exchange's maintenance schedule for today. Cointelegraph Spain reported on the transactions yesterday, and Bittrex told the outlet that no hack had taken place. While at present it is still unclear why the transactions took place, some speculate that the reason may be that funds contained in the exchange's cold wallets were moved. From time to time, Bitcoin's blockchain shows seemingly anomalous activity that is later explained. One of the latest examples took place in November when Bitcoin's blockchain mempool was at its highest level since January of last year, without a corresponding spike in the number of unconfirmed transactions. So, I don't have an answer to this mystery, but I do know that when somebody moves $9 billion, I don't care if it's Bitcoin or pesos, there's a reason behind it. And here at the desk, we're going to do our best to get to the bottom of it for you. Michael, are you there? Michael's not there. So what we'll do next, we'll go to the Concierge Trade Alerts. I'm going to give you an opportunity to grab a screenshot if you would like. Let me pull up my app. And let me see. Yes, we have a recap from Valerie, so I'll share that. I'm about to go over the Concierge Trade Alerts, but we have another alert service, our premier service, called Logic 247, beginning 6 p.m. each Sunday evening. We publish trade alerts for all of our traders around the world as opportunity develops in the market. The difference between Logic and Concierge, the Concierge alerts are a static report issued each evening shortly after the Globex Open. Those numbers are good for the entire session. Logic is delivered instantly through our private Telegram channel. And this is where we stand so far this week. We are currently in week 70 of Logic 247. This week we've issued a total of 32 alerts. 3 never triggered. 2 are still waiting. That leaves us with 27 actionable alerts. 4 of the actionable alerts have been stopped out. That gives us a total of 15% of our alerts in Logic have been stopped out so far this week. We've averaged over the last 70 weeks 20% stop out percentage. Okay, we've seen weeks of 0, weeks of 10, weeks of 14. We had a bone crushing week a couple weeks ago, I think, where it was either 24 or 29% stopped out. But we're on track so far for a very good week. And is that Michael I hear now?
That is Michael, yes.
We've been calling, screaming. I know you just getting back at me because I'm always late coming back, so that's all right. No, it's cool.
Oh, sorry.
Now,
it's
brother,
okay.
Now, we're ready for you. If you want to grab the screens right now and take it away, you can.
Okay.
All right, guys, when I come back, we're going to hit the recap, talk to John, talk to Dr. Tom, and my Carrot Bars friend is going to be here on the show with us, if all goes well, tomorrow. And the CFRN People's Choice Awards became official today. I'll have something for you to look at on the internet by tomorrow. All right, let me drag your charts up. I'll hit mute on my end, and I'll see you back here in a few minutes.
All right, sounds good. Here we go. If you have not taken a free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, or pretty much any other place that says free trial, you'll be brought to this page where all we ask for is your name, your email, and your phone number. Hit the register now button. Once you do that, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the link, we don't know that you took the free trial, okay? And sorry I was late. I got caught up in something. No, gosh. What did I do with it? No. Hang on. I'll show you the spreadsheet in a minute. I gotta bring it up. Here we go. And here it is. It's loading. Give me just a second. I'll go over the spreadsheet with you. Wow. Why is it taking so long? Okay, it is loaded. Oh, most of the way anyway. Hang on. Okay, so today we had a yellow day. That means we ended positive, but we didn't get the goal for the day. And the reason we didn't get the goal for the day is because we stopped out on the first trade and the fourth trade. And so we're working our way back. But after, the initial volatility, it got kind of sideways on us. And I'll show you all that in just a minute. But today we made 2 ticks on the euro, 13 ticks in crude. We lost 2 in gold, and we lost 1 stop out, or 8 ticks on the ES. Put us at plus 22.5. And we took 8 trades this morning. Okay, so let's go and look at this. Now, anytime when, and I say this all the time, but anytime when you start out the day at the high of the day or the low of the day, and everything is at the high of the day or the low of the day, it's probably going to be a messy day. But today, our first trade on gold was right here. Okay, there was one right here at 937. Well, you would think it was, but we had to break this dynamic resistance before we could take that trade, and we hadn't broken it yet. Then we went up, and it gave us a nice leg up, and it gave us a momentum trade, and then it stopped us out pretty much to the tick. Then it went up again a little bit, came back down, and eventually did what it should have done, and it went up. And then we had just nothing the rest of the day. Well, until over here. This was right at the end. We got a long trade right here, and we picked up 6 ticks on that one. So we stopped out for 8 ticks here, and we picked up 6 here. That put us at -2 on the gold. And then what I was looking for, I drew this line in here. Now, Bert and Dwayne were both talking while this trade was going on, and I didn't want to interrupt the conversation because it was good information. And I drew this line in here because that was the place where it should go. Okay, and it did get through that eventually, but this is all during the break, and there's just nothing there. All right. Okay. On the euro, we did have a couple of trades on the euro today. Right here, we picked up 2 ticks on this. This was the close above the trend line. Down here in the slingshot, the cycle was blue and above the green line, and we closed up above the trend line. So that was a valid trade right there. Then over here, we ended up with a break-even trade. This one was a close below the trend line. See, we didn't hit the BBC, so you need to close below the trend line. And down here, if you look down here, the cycle was red and below the green line. That's what you want to have. It didn't follow through, though. Okay, now during the break, there was one nice long trade right here. Right there. That up close off the BBC. Cycle is blue and going up. And it's a bounce off the BBC. And that is what you want to see. Okay, let's go to crude oil. Okay, on crude. The first trade we did on crude here, we picked up 4 ticks. And then crude kept going down, but it was going down into the low of the day at the time, I believe. Well, whatever. The slingshot wasn't giving us any trade setups anyway. See, right here, we would have gone long off of this. I put this line in here yesterday. And I said price is going to get back to that level, and it did. Again and again. But we got back down there, and it bounced off of that level, but the black step line had crossed below the BBC. And with rules-based trading, you follow the rules. Then we ended up with a break-even trade here. Okay, and this was a close above the trend line. I hadn't drawn the trend line in there, but I'll do it right now for you. It was a close above that trend line. And we ended up with a break-even trade on that one. Then it started moving up, and I didn't want to take this because the cycle was in the middle and it started to go flat. So I didn't take this bounce right here off the BBC for that leg. But once it started moving up and it put in a new high, then I was okay with it. And so I took that next one, gave me 1 tick. Okay, and then the market got really flat. And then we got to this period right here. And this is where, again, Bert and Dwayne were talking. I just showed everybody what I was doing. But we picked up, what did we pick up on that? 8 ticks. 8 ticks on this move down. All right. Then we get in here. This is during the break now. We had a bounce off the BBC and price moved up, came back down, moved up. We probably would have picked up a couple of ticks on that. And then we get over here, and this is during the break again. There was an opportunity to go short right there off the BBC. And once we finally put in a lower swing, there would have been another opportunity to short right here off the BBC. Now, our highest probability trade setup is when the MA1 is the right color and the cycle is the right color. And that was the case here. Okay, the highest probability trade setup. And it's still going down from there. So that's good news. On the ES, sadly. Come on, back out. On the ES, we had a couple of trades. The first one was right here. This was a close above the trend line, and we ended up with a break even on that. And the next one was also close above the trend line. That stopped us out, and then it eventually did what it should do and go up. And that was it. I mean, the rest of the session. Look at this. This is just horrible. But the crude oil, though, that last crude trade, it was from right here. 58.52, and now it's gone 20 ticks down to 58.32. So that was the morning session. Now we'll go back here. I'll go through the spreadsheet with you again. Today was a yellow day because we didn't get the goal for the day during the morning session. And we started out, well, let's say we had 2 ticks in the euro, 13 ticks in crude, lost 2 in gold, and we lost 8 on the ES. The 8 on the ES is what really got us. But we ended up with plus 22.5. Okay, and we took 8 trades. So on the month now, we're at 617.50. That's over 4 days, averaging 154 per day. And on the year, we're at 34,452. That's over 221 days, averaging $155 a day. Okay. Now, if you have not taken our free trial, let me bring that up. There. Go to the home page at CFRN.net. In the right-hand column, it says 5-day free trial apply.cfrn.net. If you click on that, you will be brought to this page, where all we ask for is your name, your email, and your phone number. Hit register now. Once you do that, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to do that. Okay. Okay, and with that, we can pass it back out. Fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready.
Okay, and sorry about the delay.
Oh, hey, no
Big
worries.
things going on here today.
No worries. Good things?
Yeah. Macy's getting her braces off and all that
Oh,
stuff.
my son just got his on about, well, it's been 6 months now, I guess.
Yeah, Jake's probably gonna need them. I don't know. I'm gonna take him to the orthodontist.
Okay, let's jump real quick. This is the December monthly trading zones for the S&P 500. We've published weekly zones since December 14th, 2009. So we're just a few days away. 4 trading days. Today's Thursday, Friday, Monday. Now, next week will mark the 10-year anniversary since we first published the weekly zones. And what they do is they provide a framework for our traders. I'll go into some more detail during the show. And in celebration of a decade of weekly zones that have been very, very good to us, I now present you the monthly zones. November, everything just went beautifully. Here's the first day of December, okay? We came down to the zone below. We sliced it through it. That was a big down day. And I've already talked to you about the being stopped out by a couple ticks up here before this. But that's the truth about trading. And it happens. So, thank God for hard stops. I would much rather be stopped out of a trade than be destroyed by a trade. So, as price came down to this monthly zone, we consolidated for, well, these are 4-hour candles you're looking at. So 1, 2, 3, we'll call it about 16 hours. We consolidated. When price approaches a weekly trading zone, a monthly trading zone, an alert trigger, or the BBC, we expect one of 3 things to happen. Only one of 3 things. The most likely is consolidation, which is what you see here. Second most likely is rejection. Rejection is what you see right here. Now price didn't quite touch the zone. The swing low, 3108 and a quarter. Is that correct? Yeah, 3108 and a quarter was the low. But this candle isn't done. It's very possible we will come down, physically touch the zone. If we don't, it could perhaps be on the next candle. But do remember, zones and all of the other things I mentioned, weekly, monthly, BBC, etc., triggers, it is an area. Okay? With the triggers, that's more of a specific price point. Monthly zones, as you go to the larger time frame, of course becomes more of an area. What we're looking for in each of those cases is for the market to make a decision. Those are important prices, important areas, and that's where the market decides, will order flow support a run to the zone overhead, or does the order flow support a run to the zone below? Now, that's not the lowest zone. That's not even the lowest zone, I don't believe. But as you can see, we've got a lot of distance to cover if we get back below this 3095. All right, so that's the S&P. Now, this is gold. Just type that in real quick. Gold MTZs. And we'll go 20. All right, December 1st. Let's open it up a bit. There we go, that red candle. Okay, so that's December 1st. We opened inside of a zone, a monthly zone, and went from the top back to the bottom, back to the top, back to the bottom. This is consolidation. It again is the most likely thing to happen. Once the market makes up its mind based on the order flow present, in this instance, we made a run to the zone overhead. Now, I've given you my prairie dog analogy, which I borrowed from Mike Reed. Price, when it reaches one of these important decision areas, I don't know how much you know about prairie dogs. They live underground, but when they want to come out and do prairie dog things, they stick their head up, look around, and if they don't like what they see, back down into the hole, back down into the network of tunnels. Okay? So he poked his head out here, retreated. Poked his head out here, retreated. But from this resistance, we come down to support. What does support do? It sends us back to resistance. So here's what I'll be watching for. Right there. If this green gold candle can get above this trend line, hold it on a pullback, we've got one obstacle overhead, right there. We got to get through the trend line, obstacle 1, swing high, previous swing high, which you'll notice lines up with this swing low and this swing low. If we get on top of that obstacle, hold it on a pullback, it's going to give us a trading opportunity of about $800 per contract, because an entry looks to be around 1492, and then the next zone, which we expect to be good resistance, shows up at 1500. Okay, I got one last one. I'm not going to show you all of the monthlies today, but since I've done it, let me give you crude oil. I know crude oil is, I know it's Michael's favorite trading instrument, and I think it's become the favorite of many of our traders.
It really is my favorite.
For numerous reasons. Would you like to share what those reasons are, Michael?
The volatility.
There you go.
Yeah, the more volatility we have, the more opportunity we have. And, if you go back and look, through our spreadsheet, look at the monthly totals. Crude oil is where we make the money.
There you go.
There you go.
Hey. And folks, let's face it, we're all here for the money. We may love trading, we may be passionate about it, but at the end of the day, you got to pay the bills, right? So, what did we do? We consolidated here, sort of a wide-ranging consolidation. Now, you'll notice as the month progresses how much more precise these zones become. So, we made a run after consolidating, made a run to the zone overhead, sliced through it. It failed to be good resistance, so on this pullback, we want to see if it's going to become good support. It did, so much in fact so, the price wasn't able to pull all the way back to the actual zone. So we catch a run to the upside, a retracement. So here's what we've got. A leg and a retracement, a leg and a retracement, a leg and a retracement. Now we have dynamic support. In fact, let me show you. I don't use these typically on the show, but because I know those of you that have been in the room are familiar with them, let me show you this. These are our dynamic support and resistance dots. Green represents support. That's broken support. Beautiful thing about the support and resistance dots is they always represent a trading opportunity. Okay? When it holds, what did it do? It sent us right back to support. What did support do? It sent us right back to resistance. Resistance sent us back to support, back to resistance, back to support. Support gave way. Now, why is there no support printed here? Because of the way this algorithm works, in order to print a red resistance dot, well, in order to print another support area, the algorithm must first find the resistance. the next color dot you see printed will be green. It wouldn't surprise me at all if on the next 4-hour candle we see a green dot show up here. What are your thoughts on that, Michael? Now, we typically use these on a much smaller time frame. He stepped away from the mic. You see this used on the range chart in the morning in the live training room. But as I told you before, everything we do is fluid across all markets and all time frames. All right, so you've seen the crude S&P for the month, seen gold for the month. Crude, gold, S&P. I'll show you the other ones. Tomorrow I'll show you the Dow, the Russell, the NQ, bonds, and soybeans. So we'll cover a little bit of everything. I'm going to show you now last night's Concierge Trade Alerts. And if you would like to grab a screenshot, now would be the time to do that. Remember, this is a static report issued sometime between 6 p.m. and 9 p.m. Eastern, unless I'm running late. And the numbers are good for the entire session. Important prices, important areas are almost always tested. So unless we have a very strong directional day, when one of these alerts trigger, there's a higher probability that it will trigger again during the same session than not. So got your screenshot? Okay. Let's go to the S&P 30-minute chart. We got them out at 8:51 p.m. So I'll highlight the 20-30 candle, which is this one. A little doji. That's the candle when the alerts were published last night in our traders private Telegram channel. And that alert said to consider being long 3122. 3122 right there. Swing high 24.25. All the market offered on that trigger 2.25 points. Okay. Because of the volatility and the large ranges that we've seen over the last couple days, sort of quiet days today, consolidation type days are to be expected. But if you're looking to grab your couple points for the day, well, there you have it. The flip side, consider being short 3097. That has not triggered as of yet. 30. Now again, these numbers are good until the new numbers come out tonight, shortly after the Globex Open. And what our traders do when they receive the numbers, they go to the charts that represent the markets they trade. They put two lines in the sand, here, here. Now remember, the alerts came out here. Everything that happens between these two lines in the sand is simply the market making up its mind what it's going to do. It attempted a move to the upside. Our methodology didn't fail. Our indicators didn't fail. Absolutely nothing went wrong. We approached the trigger. We triggered. And at this point here, at the swing high, 3124.75, order flow shifted. And when I say order flow, this is exactly what I'm referring to. Buyers and sellers. At any given time, you can see what's visible in the market. Currently, there's about 2,700 contracts on the bid side, 2,900 on the ask side. Notice how quickly the numbers change. Now, this doesn't represent everything that's out there. If you've got a seller trying to offload 10,000 S&P contracts, he's not going to show them all at once. He doesn't want to spook the market. There's a thing called the iceberg order. See it right there? Pop up, iceberg. Let's say I got 1,000 contracts to sell. I might show 10 for sale at this price. The second those 10 are executed, the second somebody buys those 10 without me having to do a thing, another 10 or another 100, whatever instructions I give it, will automatically pop into place. And that process will continue to repeat itself until this large order that I'm trying to move is complete. Okay? All right. So right here, buyers had the ball. They're taking it upfield. If you want a sports analogy, I'll take a stab at it. I'm not a sports guy. Buyers fumbled the ball. Sellers scooped it up. Now they're trying to get to the zone below. If they can get to the zone below, next they'll be chasing this trigger. Okay? And if they can get it through that trigger, the target, we don't have, this is our lowest weekly trading zone for this week. Okay? So we're above it. Last week's lowest weekly trading zone. Let me double check that. Yes. Let me get this out of the way. Now, Sunday night was December 1st. So, here's coming into Monday, December 2nd. Okay, consolidation. We drop to the next, well, we take out this week's lowest weekly zone. Buyers come in just above last week's lowest zone. So, sellers have the ball, taking it down the field, fumble, buyers pick it up, leg and a retracement, leg and a retracement, a leg and a retracement, a leg, sellers have the ball again. Sellers are trying to take it down to our lowest weekly zone. If they get through that, we trigger here, and from 30.96 to 30, it's almost a 30-point trade. That's the opportunity at $50 per point. So you can do the math, 30 times 50. Alexa, I don't know what happened to my Alexa. I got to get over there in that rat's nest of cords and unplug it. And there's no reset button. Because I tried to find it. I didn't realize how much I depended on her. All right, there's John. All right, guys, we're going to pause with the recap right here. I promise you I will recap every Concierge Trade Alert from last night, all of the logic for the week. But before I do that, we're going to talk with John, and then here shortly, Dr. Tom will make his appearance, as he does each and every Thursday, and we'll most likely talk about investment grade gold. John, welcome to the show. Welcome to the show, John.
Maybe I have as an internal metric currently.
Hello.
Hi, John. Welcome to the show.
Yeah, hi. Thanks for the invite. A lot of stuff going on today, and there's a lot of things pulling the markets both ways. Mm-hmm. The first thing I should say is, look, the two negative influences on the market today were the impeachment announcement this morning, and secondly, a company called Sage, if you want to put it up,
Yeah, let's do it.
SAGE, it lost about $100 of its value overnight on a failed drug trial. And as you know, I've said many times before, when you start getting, put up AUP, or I put up AUPH first, if you like.
Got it. AUPH coming up. All right, daily chart. AUPH.
Okay.
Whoa, nice gap.
Right. There's a lot of this stuff going on, where like in the last few weeks, there's been a tremendous amount of pharmaceutical stocks mainly going just crazily higher. You saw that IPO that went from $20 up to $150. We showed you that. And then it came down below 100. It's probably in the 70s right now. I haven't looked at it in the last few days. But now look at, unfortunately, this. So when you see this, we're in a kind of a melt-up stage, but we're also in a danger zone because bad things can start happening when the speculation gets too intense. So the opposite of that is SAGE.
Okay.
I want to stick that in right now, and it will shock you to the core.
Wow. That is, let's see. We closed yesterday around 147. We opened this morning. Man, that thing got cut in half overnight. What happened?
A failed trial.
Failed trial. Okay.
Yeah, it was a kind of I think it was an antidepressant, something like that. Anyway.
Well, some folks are going to need that medication this morning.
You better believe it. Yeah, so that tends to put a damper on the upside of a lot of stocks when you see things like this happen. Or also, it's often a shot across the bow. So the market, in my view, look, as I said yesterday, there's a lot of very powerful forces. We were kind of in almost after that first shakeout. We had a pretty good rally, and the market's not going to give up the highs too easily. And then there is this, prospect of some sort of a rally that will come out of nowhere. Something, whether it's the Fed and I'll get to that in a minute. But if we do rally, and there's a fairly strong likelihood we're going to have a strong finish to the decade. The way it's been the strongest decade in history. Why wouldn't we finish strong? It's really a huge deal. So that's the first thing. Second thing is the dollar today is finally tanking. You might want to put that up because it's quite a big deal. I think you'll agree that chart is starting to look pretty negative.
That's weekly, and that's daily.
Yeah, and we called it a few days ago. If you remember, we said that double top there might be it. And the British pound, because of the election. Now, interestingly enough, somebody came out with an article yesterday that Boris Johnson, with the divided nation, you got two of the biggest nations in the world, the US and the UK, are both divided politically in a kind of a very unprecedented way. And the way to sort of repair that damage, if you like, according to this commentator in England, is for the Brits to, really go do basically what Trump did, an expansionary policy. So the UK could really, he's talking about 8% growth in the UK. I mean, can you believe it?
It's hard to believe.
Right. So he thinks that the UK pound is very, very undervalued. That in of itself is very bullish for gold. If the UK pound goes up, I think it's going to take European currencies up with it, even though it might actually, lead. It might recover or outperform the European currencies. But the pound is clearly breaking out after we highlighted it a few days ago. And there it is. And it looks very bullish, frankly.
That does look incredibly bullish. I see it as still being under pressure, and I know not everyone sees it the same way, but I do. In fact, here's what I see, guys. I see a head, I see a shoulder, I see another shoulder. And I published this over a month ago. There's the neckline. And since I first addressed this, it hasn't really changed. So I agree that short-term chart looks very bullish.
Yeah, I don't disagree with you. Obviously, right now, I would not like to see the pound go below, the 130 level, since it's gone up to 131 plus. But right now, I think it's a fairly good bet on the upside. There's a high likelihood that we're going to gap through that red line, and it's a 2-year downtrend, and come up to that 1 year just penciling in would be the next sort of level. Reasonable upsides up around 140, I guess. And if we take that, I think we'd go higher. I think we'd go to 145, maybe 150. So that's a very big deal for the pound. And that'll take the dollar down into the low 90s more than likely. Then you've got this thing going on in Japan where by the way, I didn't highlight this for everybody yesterday, but the $120 billion, the 130 trillion yen, is that right? $120 billion
Yes.
Stimulus package. That is the equivalent of the US putting $1 trillion stimulus package behind the economy. So I think I'll have to tell you that's a huge deal in Japan. And I actually going to make a forecast here. I think
120 billion US dollar stimulus package.
Yeah, so that's the equivalent, based on the size of the economy, of about $1 trillion for the US.
Gotcha.
And $1 trillion, you don't have to. $1 trillion stimulus would be just send the market up 36,000, and that could be coming based on what I said yesterday about what Kashkiri might be lobbying the Fed to do. So you've got, what I'm trying to say is you've got these different countries around the world that are really going to be pushing the envelope in 2020, including, remember, India is doing a similar thing to the Trump thing already. It's already in place. Brazil is doing the same. So you've got more and more countries around the world. I mean, they keep hearing Trump going on about the U.S. economy. Don't you think they want to do the same for theirs? So they're slowly but surely, the rest of the world are going to get in line and start implementing the Trump economic formula.
John, I haven't showed this in a long time. I know we've looked at it before, but you just mentioned $1 trillion. Here's a man to scale looking at $1 million.
Yeah.
Here's 100 million. Here's $1 billion. This is 1 trillion double stacked pallets, and this guy looking down at this 1 million, this is the same guy to scale looking at $1 trillion.
It's huge.
Is that it's incredible. It's absolutely
and 23 trillion in debt is
where we are. Yes.
Yep. So so we've got these very powerful forces developing, and there's also, you never know, look, a lot of times with these deals, if you remember, we had, I think it was back in 2012, there was a shutdown of the government, or a threatened shutdown. There was this funding thing going into the end of the year, and it looked like at the 11th hour it wasn't going to happen. And then it happened right on the 31st of December. The next thing you know, we're gapping up massively in 2013, 2012, and 13. That's never happened before. We never had 2 up gaps in a year ever. Maybe earlier in history, possibly back in the 30s or 40s or something like that. But this was the distinct, and look at where it took us, So these gaps that don't get filled are really, really powerful, and the 2012 gap and the 13 gap never got filled.
Which market, John? Let me bring that up.
In the stock market. In the stock market.
All right, are you talking like New York Stock Exchange or S&P?
In the Dow, S&P, and Nasdaq, I think they all
Let's
the same.
look at the SPX for a minute. Now, guys, the SPX is the actual S&P 500 index. What we trade is a derivative. You can't trade the actual index, so man had to create derivatives so that we could trade it. That's how we have futures and spiders and all these other instruments that people do trade. Now, this is a monthly chart. And I'd have to drill way down to see these gaps. Is there some specific area you'd like to take a look at?
Well, 20, it was after 2011, so, you know, as when in that period going up there, so 2012, you see 12, there it is, you can actually see it. 2012 and 13 were the years that it happened.
Okay.
So you see how we had that doji right before the end, and then we gapped higher into 2012, and then look at 2013. It's the same thing. We gapped higher there in 2013 with a hugely strong up move the first month. Now in 2012 we pulled back a bit, but we never took out that low. We never filled the gap, tested it maybe, and then 14. Look what an incredible year 13, 14 was. You know, so it was straight up really from the beginning.
There's the first trading day. Well, it's the beginning of January 2014, right there. This is a weekly chart, our monthly chart. I'm sorry.
Yeah. So now I was referring to 12 and 13. You know, we started getting into trouble around 15, 16 when we had the pullback. Now,
when we fail to put in a higher high here, that's an issue. Whenever that happens, guys, just keep that in mind.
Yeah, by the way, so, you know, there's a lot of mixed stocks as well. There's stocks going up and down today. It's by no means a uniform market. And however, if we recover from this sell-off this morning, I would consider that to be a very strong development. One of the things that came out today is the expected jobless claims was 215,000, came in at 2,003. That's not the lowest. We've been down in the 190s, in the high 190s, I think. But it certainly is it's an encouraging sign given the ADP miss yesterday. In other words, the fact that there's a drop in jobless claims probably means we might actually beat on the real number tomorrow. If we don't, you know, like I said yesterday, I think it makes the Fed more likely to possibly do one more rate cut before the end of the year. And if they do that, I think that's really a formula for a very strong finish if that happens. Now, they may say a lot of stuff if they have a conference. They may say a lot of bullish things. Now, let's just look at a few things that are going on today.
Well, John, it's top of the hour here, and Dr. Tom's waiting in the wings. Do you want to pop back on after I speak with him?
Yeah, okay. Yeah, just a couple of things. Look, the grains are turning higher. Not the wheat and the corn, but the beans. The beans are turning higher, and they have been for a few days. They look like they might have actually put it in the bottom. Also, I mentioned the platinum. The platinum put in quite a good test today. It's back over 900. I think if it goes over 905, 907, and the lows might be in on the platinum based on the way gold is clawing its way back. So I'll finish off on that later today.
Pop back in, top of the hour.
Okay. Thanks.
All right.
Bye-bye.
Okay.
Bye.
Dr. Tom, welcome to the show.
Hello, my brother Wayne. How you doing?
Good. Now, I see you got a busy day, so if you've got things you need to attend to, but you know we always look forward to having you on Thursday, having a chance to speak with you. So, ball's in your court. You call it.
Okay, great. Well, if you want to shoot the slides over to me.
You betcha.
And while you're doing that, if no one else has already beaten me to it, let me be the first to wish you and your audience a Merry Christmas.
Merry Christmas to you, my friend. And yours. There you go. Chart's yours.
Okay.
All right. The only collectible commodity.
Yes. This is a very interesting subject. Everybody knows what commodities are, particularly on this show.
Mm-hmm.
But the idea of a collectible commodity is something that very few people are familiar with. So let me just go through this. Here's a picture of a collectible. This is a Byzantine coin.
Mm-hmm.
As you know, this was the first Christian empire. So this is a very, very old coin. It was produced somewhere between 613 and 641 AD. So it was produced before you and I were born.
Yeah, just a little bit.
Yeah. But we would not think of this as a commodity, right?
Not in the traditional sense, no.
Okay. Now, what is a commodity? Why don't you give us the definition of a commodity?
Well, a commodity is anything from soybeans to pork bellies to bullion gold, silver. That's traditionally what people think of when they think of commodities. Something that is used.
Yeah.
A commodity is something that you use up and replace.
Great definition. And according to this picture here, the people who trade commodities are very messy.
They are.
All right. Now, what is a collectible? Okay. A collectible can be, again, like a commodity. It can be any one of dozens or really hundreds of different types of items that people value for their beauty and for their profit potential. So we see ceramics there, rare paintings, statues, vases, collectible coins. There are people that collect antique shotguns, baseball cards, comic books, but those are usually not the ones that you make a lot of money on.
My wife has developed a new side hustle. Her sister works at an auction house. They have an online auction every Sunday, and my wife bids on these boxes of collectible things, just like stuff you see here. And you get the boxes home, and in each box there's an assortment of things that came from an estate sale or whatever the case might be. Well, 2 weeks ago we found 2 Rolexes. But she's got her whole little setup there with her big magnifying glass, and she'll flip that plate over. She'll look at the mark. She'll go chase it down on the internet. And if somebody out there is selling that plate for 90 bucks, boom, she's got it up on eBay for 75. With a link to the person that wants 90. Yeah, you know what? It's a profitable venture, but it's not work for her. It's like Steve Jobs said, find a job you love and you'll never work another day in your life. So she's just having a time of her life and making money. Boy, that's the grace of God.
Yes, amen. Yeah, I used to do a seminar on success, and my definition of success was something similar. It's doing something you love so much, you'd be willing to do it for free, but doing it so well that people come and lay money at your feet for doing it. So
that's right.
Sounds like she's a very successful person.
She is.
And by the way, what she's doing is a lot harder than what I do, because I only have to learn about one collectible. She has to learn about all different types of collectibles to know whether she's got something really of value. So my hat's off to her. Tell her congratulations.
Oh, in fact, okay. You keep talking. I'm going to step aside 2 minutes because I think she found some old coins that we could not identify last week's auction. So you keep talking. I'll be back in 2 minutes, and if I'm successful, I'll have those coins in hand when I come back.
Cool.
Okay. All right.
So anyway, folks, just to finish up on this slide, the collectibles are things that people value, not just for the profit potential, but for their beauty, and they enjoy displaying them and so on. So here's some differences. Normal commodities are regulated, and you see the little wordscape here: government, big brother, oppression, overregulation, excessive regulation, no privacy, and so on. Bottom line, if you buy traditional commodities, there's no privacy whatsoever. And that's true of most any investment, whether it's real estate, stocks or bonds, options, you name it. Almost every one of them is regulated. But collectibles are not regulated at all. It would be impossible for the government to really regulate commodities. Now, when it comes to bullion gold, they do. It has to be reported when you buy it. But when people buy collectible coins from Golden Art, there's no requirement for us to disclose that, report it to the government, or whatever. So it's strictly up to you and the government on the honor system. So when you have privacy, you have freedom, economic liberty. The Constitution talks about the pursuit of happiness. Well, happiness to me is freedom. So anyway, there are benefits to not being regulated. Okay. Number one, as I mentioned, there's no registration of your ownership. So it's strictly private. In Europe, the people over there have higher taxes. I mean, we think our taxes are bad, particularly the death taxes, where they could take a huge percentage of your estate. And sometimes it could be so bad that you're forced to sell whatever the property is. Say like it's a family farm that's been in the family for generations. It has to be sold to pay the death taxes on it. So that's really onerous. But in Europe, it's even worse. Their death taxes are just horrendous. So what a lot of people do is they'll get collectibles. We'll use the example of a gold collectible. And there's 3 kids. And so they buy rare coins, divide them up into 3 little sacks. And as they're getting older, they tell the kids, don't look for a lot in the will because that's public information. But check out the sock drawer. Okay. So no registration. Confidentiality, that goes along with that. Let's say somebody trips on your front porch. Maybe somebody you didn't even invite there. Maybe they're trying to sell you something and violating your privacy, coming on your property, knocking on your door. You don't even want them there, but they trip and get hurt. They'll try to sue you. But the first thing their lawyer's going to do is look up on the internet. Now, you might think that your ownership of stocks and real estate and various other things are confidential, but a lot of that is public information, and what's not, any good hacker can get in there and find out. So if the lawyer looks and sees that you don't have very much to show in the way of assets, they'll tell their client to go trip on somebody else's front stoop. In my case, since the majority of my net worth is in precious metals, somebody looked me up. I don't look like I'm worth suing. That's worth a lot to me. Confidentiality. Okay.
That box already went to cold storage.
It did?
Yeah, next time I'm there, I'll pull them out and bring them to the show, send you a picture.
Yeah.
I meant to do that.
Take your cell phone, put it on a really plain background, take pictures of both sides, and send them to me.
Okay.
I'll be able to help you out.
Beautiful.
Okay, another thing about collectibles is you can transfer ownership without any records. So let's say you decide to sell a collectible or maybe trade one. Maybe you collect antique jewelry, and somebody else has a piece you want, and you got something that he wants. Or it could be paintings or coins, whatever. You could just trade. If you try to do that with stocks or real estate, the government wants its piece. So, no possibility of government confiscation. That's pretty cool. If you remember, back in 1933, I've spoken about this before, FDR confiscated all the gold coins, all the bullion in the country. But they exempted rare coins. And there's a simple reason for that. The very first US $20 coin was the 1849. They only made 2 of them. It was more or less like a sample to show to the president and maybe the Treasury to see if they liked it. Well, somewhere along the way, some idiot managed to lose one of the very first $20 gold coins. So only one exists today. And it's a $20 coin. It's a 1 ounce coin. So it's worth like around $1,500 as far as this metal. But as a rarity, as a collectible, it's worth over $25 million because of its rarity. Well, if the government said that people had to turn in their rare coins, people would work very hard to hide any rare coins because they can be worth many, many times their bullion value. Even if it's not 25 million, let's say it's a coin that's worth $2,000. You're not going to trade that in for a $20 Federal Reserve note, are you? Not unless you're crazy. So they knew that if they tried to confiscate the rarities, there would be all kinds of court cases, arbitrations, and so on, saying, hey, the government's trying to give me a $20 worthless piece of paper from the Federal Reserve for this coin that I paid $2,000 for. And the judge would side with them. So they just exempted them. So this is one thing I like. They can confiscate your bullion all day long. And of course, there's nothing to stop the government to do pretty much anything it wants to do. It's got the big guns and so on. But in practice, they found that it was not worth the effort to try and track down and find rare coins that have been well hidden. So this is one big, big benefit of having collectibles. Okay. You could have marketplace domination without restriction. There's certain coins that we buy, and if we can manage to control, say, 20 to 25% of that particular issue, that particular coin, we're the market makers. We're the big dogs. And nobody can restrict that because in most cases, nobody knows when you're buying a coin who you're buying it from. I'll give you an example.
Okay, go ahead. I have a comment for you, but go ahead and finish your thought.
Go ahead.
Well, the comment is irrevocable trusts. They don't die. Change beneficiaries with no reporting requirements. Just saying. That's from Tim. Any thoughts on that?
Well, that's true. You can put rare coins within a trust. But remember, there's a cost of setting up the trust. And if you don't have a whole lot of money, in many cases, the lawyers will tell you it's not worth setting up a trust. But that is a good point.
Is there some ballpark figure you work with? Like, is $1 million, does it justify, or 500,000?
I think that's a question for a lawyer. I do know that it costs several $1,000s to set up.
And then there's an annual. Trust. Is there an annual maintenance fee? To
Depends on
maintain
your
the trust?
state,
Oh.
and also your lawyer. He may want to review it and update it every year.
Tim was speaking, I guess, specifically about real estate, or referring to real estate. How does
Okay.
does that fit into an
With
irrevocable
real
trust?
estate, you can put that in a trust, and that protects it from the lawsuits we talked about.
Mm-hmm.
But it doesn't give you any privacy because the real estate has to be on the county's rolls.
Gotcha.
So whether it's in your name or in the name of a trust, the ownership is public. Okay.
Now, when I stepped away, you may have covered this, and maybe this is a topic for another day's discussion, but a blind trust and an irrevocable trust, what's the difference? And if you want to talk about that another day, we can.
No, I could just explain it very quickly. A blind trust isn't what it sounds like. In other words, you know that you got it and you know what's in it.
Mm-hmm.
Okay. But it's blind to you, like the president had to put his stocks or other assets into a blind trust. It simply means that he can't have anything to do with any of the transactions.
Mm-hmm.
And the person managing the trust can't tell him what he's buying or selling because he has unique information about certain markets that the general public doesn't have.
Right.
So it just has to be hands off. Only instruction he can tell the person running the trust is try to make me a lot of money and do it with such level of risk.
Mm-hmm.
And that's pretty much it. Then he's hands off.
Okay.
What was the other one you mentioned?
Well, there's blind and irrevocable.
Okay, well, there's a lot of other kinds too,
Okay.
like family trust and so on.
Mm-hmm.
But an irrevocable trust basically means that the assets go to a certain person
Mm-hmm.
on the event of a certain event.
Okay.
Now, it could be when they get to be a certain age,
Mm-hmm.
or it could be when you die. But as long as you control it, you say what gets bought and sold, but you can't revoke the ownership of it without going through some legal rigmarole.
Okay.
Okay.
And just really quick, why do we want to put things in a trust?
Well, protection from lawsuits. That's the bottom line.
That's the bottom line. Okay.
If people know that you have money, assets, if they know that you're substantial, then you're a target for lawsuits.
Sure, sure.
So that's the main reason for it.
Does-
Again, that's legal stuff, and I'm not a lawyer.
No,
but
no, I understand.
that's
And does
pretty
that
common knowledge.
protect you from just civil lawsuits? What if, let's say, somebody owed the government some money, and they put some money into a trust? That's not protected, is it?
Yes and no. Depends on which government. Like, for instance, student loans.
Mm-hmm.
You could go bankrupt and you still owe the loan. That doesn't get washed out in a bankruptcy.
Okay.
So generally, the government will give itself permission to break rules that everybody else has to. For instance, years ago when I was a firefighter, I'm driving a $500,000 fire truck with no insurance. You have to have insurance on your car, right?
Right.
But the government exempted itself and said, we're self-insured.
Okay.
So they didn't have to pay premiums. So the government exempts itself of a lot of things. Insider trading, for instance.
What if a person
Congress
owes the government
getting-
taxes? What if it's that's kind of a scenario?
I'm sorry?
If an individual owes taxes, as an example, is that protected inside of a trust, or can the government pierce that veil with no difficulty?
My understanding is that if you had it in the trust before the tax was incurred,
Mm-hmm.
then it's inviolable.
Okay.
However, if you knew that you were going to be sued, for instance, or if you knew the government's going to hit you with a tax lien,
Mm-hmm.
and you moved it into either somebody else's name or a trust
Mm-hmm.
or whatever, that's fraud,
Okay.
and they can penetrate that.
That's what I thought. Okay.
But again, folks, I'm just talking from my general knowledge, what I learned in college. I did take business law, but I am not a lawyer, and I did not stay at a Holiday Inn Express. So
Yeah,
don't
we're
take
not
anything I
lawyers
say.
and we're not accountants, so don't take legal advice or financial advice of that manner from this radio program. Always check with a licensed professional in the area that's their area of expertise, not just some jokers
Amen.
on the internet.
Amen. Okay,
All right, back to you.
there are actually benefits of being regulated. One is that when you have regulation in place, then you have what's called price transparency. So you have a true two-way marketplace. So that's a benefit of having regulated. For example, there's no bid and ask for a Persian rug,
Right.
which the one you're looking at there is worth several $million, or a Picasso, which I can't imagine anybody pay more than $10 for that thing. But again, it's worth millions.
Beauty's in the eye of the beholder.
Exactly. And some people are blind. Uh, there's one really, really famous painting called The Scream. And it's a kind of distorted face of a person, but their mouth is extended in a big scream, and the mouth is half as big as the head. It is a truly ugly, disgusting looking painting, but it sells for millions of dollars.
Wow.
Okay. All right. So commodities have advantages and disadvantages. The advantages I just mentioned, the two-way market. There's always a bid and an ask out there somewhere, unless there's some very unusual market conditions and nobody's just putting up a bid, you know. The disadvantage is that everybody knows everything you have. Same thing with collectibles. They have advantages and disadvantages. So you have to weigh whether the advantages or the disadvantages are worth more or less. The big advantage, among the others that I already mentioned, is confidential ownership. That's the main thing. Privacy. Privacy is freedom. Privacy is liberty. That's why our forefathers came to this country, for freedom and liberty. Another advantage is steadily rising values. That's not the same with a lot of other asset classes you can invest in, and it's not always the case with all collectibles.
Yeah, let's talk Cabbage Patch dolls for a moment. I'm serious. Remember those? They were in craze, almost like the tulip craze, but those Cabbage Patch dolls, for some reason, at some point in time, were incredibly valuable. I don't think that's the case anymore.
I think the market got saturated with them,
Okay.
but that's another example of something that's truly ugly.
And there's no scarcity.
Right?
The factory
they
just
can
keeps
keep
grinding them out.
making more. Yeah.
Okay.
I think if somebody gave birth to a child that looked like that, take it down to an orphanage.
Send it back.
But most collectibles do just steadily rise in value. And one, which is investment grade gold, hasn't had a down year in 100 years. Now, we're not talking about the minimally rare coins, but the ones that are extremely in extremely good condition and that are very rare. Not one down year in 100 years.
That's pretty
And it
amazing.
probably goes back a
That's
lot
pretty
farther
amazing,
than that. Yeah, we just don't have reliable records to show it. But it probably goes back several hundred years. The first rare coin market was opened in London in 1660. And for certain coins, we do have records all the way through. They just keep going up because they're like land. You can't make any more of it.
That's right.
You can make more coins, but you can't make any more rare coins of a certain age
And you can't make
and
any
a
more
certain
gold.
alloys.
You know, after 7 days, God shut down production, and whatever gold he created, he sealed it up in the belly of the earth, and that's it. We're not making
I like
any more.
that. I may steal that
You
quote
may
from
use
you.
that. I've used that for a while, and it's so true.
Okay. All right. A disadvantage for most collectibles is that there is no two-way market, except for coins. Okay. What if you could combine the best of both? Okay. The best of commodities and the best of collectibles. Well, it is possible. And it doesn't give you a lot of calories. Like that
And please, folks, don't put bacon in your milkshake. I mean, that's just weird.
Okay.
Little D was with me somewhere the other day, and he goes, "Grandpa?" I go, "Yeah, son." He's like, "Milkshake." I go, "Yeah, you want one?" He goes, "But it's got bacon." And I tried to explain how weird some Americans can be sometimes, and he got it. He didn't want one, but yeah, he understood.
I tell you what's really weird in that category is going and ordering like a root beer float and telling them to use diet root beer. But you,
that's funny.
Ice cream is full of sugar. So go figure.
Yeah.
Okay. Here's the point of this whole thing. Rare coins are the only collectible commodity. So they're the ultimate, as far as I'm concerned, in investments. Now, we're not talking about trading. Again, as I've mentioned before, you guys make a lot more every month trading than I do holding rare coins.
But yours is a passive thing, whereas, you know, we got to bump and grind every day to make that daily bread.
That's true.
But once you invest in something like a collectible rare coin, you don't have to do any more work except be patient.
Yeah, and frankly, other collectibles are not the same. Okay, but with investor grade gold or rare gold, there is no other collectible. In other words, a long-term investment, because we suggest when people buy these that they look for a 5 to 6 year time horizon to make the most profit. There's no other collectible that's reliably gone up as rare coins have. So that's why they're the ultimate. Okay. Any questions? I don't know how we're doing time-wise.
Well, I've got as much time as you have today. So, let me ask this: is there some kind of ballpark figure, percentage-wise, that, let's say you're holding some rare coin, and I know they're all different, but you're going to hold it for 6 years. Could you expect it to appreciate 10% a year, 5% a year?
10% is a good number.
Okay.
And the more rare it is, the greater it is.
Okay.
I'll give you an example. And by the way, this is also speaks to the point of privacy.
Okay.
We're well known for Golden Art, our company, is well known for being able to handle the super rare stuff. A lot of coin dealers just don't have the clientele for it. So there was a dealer in California that had control of a Simon Petition crown. That won't mean a lot to people, but if you go on our website, you can find out a lot about it. And by the way, speaking of websites, I should have mentioned that there is a website called CFRNgold.com. CFRNgold.com. And if you go there, fill out the little short form, you will receive something called the Gold Education Starter Package. And it goes into a lot more detail about what a collectible is, how it becomes a collectible, how to negotiate it, and so on. But also an answer to your question as far as percentages. There's an article there called the 10-10-10 Financial Survival Plan. And that's how you could survive the coming crash, because it is coming.
Mm-hmm.
Okay. There's no doubt in the minds of the people who are really knowledgeable in this that there is going to be a crash that's going to make 2008 look like patty cake. Okay. But anyway, this example, the dealer had this extremely rare coin, one of only 12 ever made and one of only 7 available today. The others have disappeared, been damaged, or squirreled away somewhere for privacy. So there's only 7 known today, and 4 of those are in museums and can never be sold. So basically there's 3. Remember, anything under 5,000 is rare. There's only 3 in the public float. And this one was the best quality of the 3. So the price on it was $660,000. Well, we knew right who to go to, because we have a client who's bought millions of dollars worth of Cromwell coins. It's called the Simon Petition crown because Simon was the one who crafted it, but it was from the era of Cromwell. Cromwell was the only ruler of England who was not of royal blood, so he couldn't call himself the king. So he gave himself his own title, the Lord High Protector. So if you want to, Dwayne, you can call yourself the Lord High Protector of CFRN.
Okay.
If you need another title. But anyway, because he was only in that position for a short number of years, there was a small number of coins created. So they're very hot commodity. So I knew this client of ours would buy it. Now here's the point. I didn't know who the seller was.
Mm-hmm.
The dealer I was dealing with had contact with the seller, but he's never going to reveal that seller's name to me,
Mm-hmm.
because he's afraid I might try to go and poach him.
Right.
And by the same token, I knew who bought the coin, but the other dealer and the seller have no clue.
Right.
Can you imagine selling something for $660,000 and not knowing who you sold it to? So that's really the ultimate privacy. But you asked about return.
Mm-hmm.
Lower cost, lower rarity coins, you'll make probably 10%, 12% a year. Some of them could be 25%. In this case, in a 2-year period of time, the value of that coin tripled to, a little less than tripled, to $1.8 million. Okay. So this is why I say these, collectible coins are the ultimate collectible. And you don't have to be rich. You don't have to be a Rockefeller or a Vanderbilt to buy them. We have families that are, cops, teachers, radio program entrepreneurs, all kinds of people that own rare coins, and they're of modest means. So it's something that anybody can get involved with. But I can tell you this for sure. If you have rare coins and the crash comes and you're the only one in your block that's that has them, you're the richest person on your block.
Interesting.
Hands down.
If you own stock, I know that you can borrow against your stock. Is that true of a collection of rare coins?
It is, but in my humble expert opinion, it's not a good idea to borrow against either. I've had clients, what you're talking about,
I agree
the
with
stocks,
that as well. I'm just curious, yeah.
Yeah, I just don't think it's a good idea. And same thing with collectible coins. You're only going to get a percentage if you borrow against them. And then if you get in financial trouble, you might lose your whole collection, just like you could lose your whole stock account.
Gotcha.
So,
but
I just don't think
how about
it's
a scenario where a guy has a rare coin collection valued at whatever, and he has an opportunity, a once in a lifetime opportunity to buy some super rare coin, but he's not liquid. He doesn't want to sell the coins he already has to buy this new super collectible coin. Is that a situation where an individual might borrow against their collection to purchase this special coin, especially if they think they can sell it maybe in a short period of time to someone else?
Sure, it's kind of like what the Bible talks about, the pearl of great price. You know, the guy went and sold everything he could to get it. Our buyer, Greg, had that exact same situation. He found a coin that he just had to have, and he owned a coin store in Philadelphia. He sold his prized, fully restored muscle car that he loved more than he loved his mother. He cleaned out his bank account, his retirement account. He borrowed money from everybody he could, and he took the subway to work for the next 2 years.
Wow.
Because he didn't have a car, because he had to have that coin. So that's one way to do it. Sell other stuff. Another way is to borrow against it. And in that case, it might make sense. But frankly, what I would normally advise people to do is what most of our clients do. Because if they follow this path, we don't charge them any commission on the coins they're trading in. So they can trade their lesser value coins in, and because it's a like kind transfer, it's like in real estate, can't remember the title of it, but there's something 31 exchange where instead of selling a piece of real estate and buying another.
Yeah, I bet Tim knows that number. I'll check in the chat box. Go ahead.
Yeah. 531 exchange, maybe something like that. But anyway,
that sounds
if you sold the property, you'd have to pay taxes on it, and then you'd have less money to buy the other property. But if the properties of equal value, you can trade them, and there's no taxable event. So if you've got gold of any kind, we have people that even have bullion gold. Now, you and I know that bullion and collectible gold are two different animals.
Right.
But the government doesn't consider it that way. So if you trade gold for gold, if somebody's got a stash of bullion gold that's not making them anything, it's good insurance, but it's not making them any return. They could exchange that for rare coins, or they could exchange lesser value rare coins in order to get the pearl of great price.
Gotcha. That's a 1031 exchange, by the way.
1031.
There we go.
I knew the 31 was right because that's how old I am.
All right. Yeah. You and me
I
both.
wish. Okay. Well, we're at the top of the hour. Are there any other questions that I can answer quickly?
I think I've been keeping pace with them. Tim did make a comment. Better to have the other precious. Better have the other precious metals: machine steel, lead, and brass. I'm not sure exactly when that comment came in and what you were talking about, but anyway. Tim, is there anything else? Any other questions that you had? Anyone else, guys? If you have any questions about anything we've talked about, Dr. Tom did give you the address, CFRNgold.com. That's all one word. When you go there, there'll be a little short form you fill out. We don't need your mother's maiden name or any of that other nonsense, but we do need to know how to get this starter package to you so that when Dr. Tom comes on each Thursday, as he does, you'll be on the same page and you'll be able to ask the important questions as they apply to you and your financial situation.
Yeah, and excuse me, speaking of that, there's some things that people don't like to talk about publicly. So Tim asked really good questions. I'd love to talk to him sometime. Here's my telephone number. It's my direct line. It's 561-753-5998. 561-753-5998. And if Tim or any of the others would like to talk to me privately about their personal situation, I'm happy to do that. Also, if you already have a portfolio of either rare or common, bullion, silver or gold, I can help you with a portfolio evaluation, and we don't charge for that.
Oh, okay, very good. Well, Tim is one of our traders, and he's, when I met him, or he's lived in Bali. I think he grew up in Oregon or Colorado. He's back in the U.S. right now visiting some family matters. I think his grand plan includes a return to Bali. But yes, I hope he will call you because I think you guys would hit it off. I know you both. I've had dinner with Tim, met him in person. And yeah, I think you guys would have a great conversation. So Tim, feel free to give the good doctor a call anytime.
Okay. Well, God bless everyone. Merry Christmas.
Merry Christmas to you, my friend. Now, we'll be doing this show again next week, and I guess the Thursday after. What day does Christmas fall on this year?
It's Wednesday.
It's a Wednesday. So, will the market be open the day after Christmas? I think so.
Usually it is. It's a half day on Christmas Eve and all day on Christmas Day.
Okay, well, I'll tell you what, I know it's holidays and you may want to spend time with your family, so if you would like to be with your family on that Thursday after Christmas, I completely understand, but we will do the show since the markets are open, and of course, we'd love to have you. If you're just killing time, not doing anything else, join us.
Well, actually, on that day, I won't be able to because we're doing what we call a staycation. Usually we go to the mountains or something, but the family decided we want to stay home, and we're going to go to some nice museums and different things. So we're just taking that week off.
Okay. Very good.
But I'll be here next week, the 12th, and I'm available on the 19th as well.
Perfect.
Okay.
Perfect. And I would like the conversation you and I had the other day. A couple developments have come along, and you get a chance, give me a call.
Okay. Absolutely.
All right,
I've been wanting to talk to you for a week.
Okay.
So.
Anytime.
Okay.
All right. Take care.
Great day.
Bye-bye. All right, guys, I will grab back the screens here, and we will return to the recap. All right. So, we covered the S&P. Small move to the upside, good for a couple of points, and then price ducked right back below this current weekly trading zone. Made a run at the zone below. Couldn't quite get there. You have sellers perched here. You have buyers perched here. You can think of that as resistance. You can think of that as support. Price will work between these two areas until one of the two makes a financial statement that they are more committed to their position than the counterparty. With a little disclaimer, it does take financial commitment for price to rise in any market. However, if buyers go up against this area too many times, and well, how many is too many? Okay, that's unknowable in any market. But at some point, if buyers in mass become convinced that right now they just cannot get through this area, they will simply stop buying. And like a school of fish that churns in mass, when buyers stop buying, it requires no financial commitment for the market to fall. And when buyers stop buying, when they just like step aside, because if they can't get through this area of resistance, they're going to go look for where reasonable support is. And we can see we have such a thing right here. But this is on a small scale. This can develop on, of course, a much larger scale. But just picture this. These are 30-minute candles. You know, buyers were buying and they got knocked down, and then they tried and got knocked back, and so perhaps right in here they said, you know what, let me just step aside, let price fall, let gravity take over till we get to this area of reasonable support. I'll start buying again up until perhaps we run into that wall, at which point I'll take my profit, step aside, let price drop. Okay, here's a mistake that traders and investors always make. We've all heard buy low, sell high. But when something's at a low price, it's kind of difficult to buy it. And this is a lesson we should all learn. Okay? What typically happens is we wait for something incredible to happen, like, you know, Bitcoin running up to 20 grand. So what did everybody do? They ran out and bought Bitcoin. And you know what happened after that? Now, the guy that paid 19,000 and change for one Bitcoin on one day, a few months later, he had an opportunity to buy the same Bitcoin for, I think, about 3,000. We'll call it 5,000. He had no problem paying almost $20,000 for that Bitcoin because everybody was rushing out to buy the Bitcoin. When it dropped to 5 grand and nobody really wanted it, he didn't have the courage of the stones, the right stuff to go in, recognize the opportunity, and take advantage of it. That's why so many people don't make money in the markets and others do. Now, whether you're an investor or a trader, try to wrap your mind around that. Now, don't think that just because something has fallen a lot that it can't fall any further. You know, there's called bargain shopping, bargain hunting, that kind of thing. So swooping in and scooping something up at a low price is a smart thing to do if you have good reason to believe, by basis of your technical analysis or your fundamental analysis, that it's actually going to try to make a run at that previous swing high, whether it's real estate or investment grade gold or pork bellies. So I hope that makes sense. And I'll look and see if there's any questions in the box. Okay, not at the moment. Okay, so then what's the next high probability move from where we sit? We ran into resistance. We pulled back to support. We printed a green candle. Looks like we're trying to print another one. I can layer one more thing on here that helps you with these decisions, and learning to make a decision leads you to being able to create your narrative. Okay? Now, let me do this again. Where's the next high probability move? Sure looks like the zone overhead, right? I mean, we were at resistance. We pulled back to support. Buyers are doing what buyers do. Price is starting to move up. I don't doubt that a whole lot of traders all over the world are staring at this right here, right now, going, woohoo, this is it. We're going to make a run at that all-time historic high. We're sitting here at about 31, we'll call it 31.15. Well, from 31.15 to the all-time historic high, that's a 10-point move. That's $500 per contract. For a 10 contract trader, it's $5,000. Not a bad Thursday, right? But not so quick. This is what we'll attempt to teach you. My traders, no way are they going to buy the S&P 500 Emini Futures right here, right now. If they do, I'm going to go make them stand in the hallway and see me after class. Because the high probability move is actually here. At least back to support. Why? That green line, we call it the bull bear cross. Got to call it something. When price is above it, we anticipate higher prices until price gets below it. And then we anticipate lower prices until price manages to get back above it. Now, I know many people say, oh, that's so elementary, it's just silly. Let me show you how a real man trades. And so they whip out their $20,000 algorithm or Holy Grail or magical indicator or mystical oscillator, and they lay some story on you about whatever. Simple is good. I think simple is better. I've seen and used many expensive, complicated strategies of all designs based on all kinds of principles and theories. But I have never seen a methodology that outperforms what I show you on this radio program every single day. Not as a brag, not as a boast, simply a statement. If there is someone out there who has a strategy or a methodology that they think can outperform over any period of time, got at least a minimum of a week or a month or quarter, if they would like to do a friendly challenge, you know, we'll put our money in some brokerage account. We'll make everything viewable to the public. We'll be completely transparent. Not to try to show each other up, just simply to exhibit how much we believe in the methodology that we've crafted and how much they believe in the methodology that they've crafted, and to make sure it's not some ego showdown at the end of the period, whether it's a week or a month or a quarter. The profits go to a charity of their choice. How about that? If they're willing, I'd like to see the profits split between New Hope Orphanage and their favorite charity, but I'm willing to even go that far. Again, not to brag, not to boast. I have nothing to prove. I only want those traders out there who are struggling and are passionate about this. They feel in their bones they were born to trade, but they just can't seem to do anything right. They blow up account after account and after account, and they're concerned that maybe they're becoming like some gambling degenerate or something. Okay, I want to put those fears to rest. I want you to know that it is possible. It's not easy, but I'm going to show you that it can be simple. John, welcome back. What do you want to talk about?
All right, thanks. Well, I know you got a down arrow there, but right now we're rallying kind of strongly, starting to rally.
If we close above this green line right here, then that arrow will point this way.
Yeah.
That's simple.
Yeah. I one of the things that I've identified with this new work I'm doing, it seems to work extremely well, is I call it the magic buy signal or sell signal. You know, when there's a trend change, it actually shows up, and we went back to a kind of a potential magic buy here just a short while ago. So and that's quite important, because rallying on a Thursday afternoon before a jobs report, more often, not 100% certain, but more often than not, it is a prelude to a higher price on Friday. You know, this, in a way, if you look at the I guess you probably can't see it on your chart, but if you go to a 2-hour or 3-hour chart,
I can do that. Let me just point out, guys, you see the trend line I just drew? If this candle closes above that trend line, see, now we're going to be looking to trade up to that zone overhead. If this candle closes below where it opened, then we're going to trade to the zone below. It's that simple.
Yeah. I mean, you know, this pullback today, while it's a pullback, it's actually, we're negative. We're positive on all the indices right now.
John, it's I'm sorry. Go ahead. This is 2 hours.
So, yeah.
You want futures? This is the cash index.
Probably the futures. Yeah.
Okay.
Yeah.
Okay. And here's the December contract.
Okay.
2-hour chart.
You see how we could be putting in a head and shoulders bottom there.
I do.
Kind of a right. So, you know, if we did suddenly get a sharp recovery back towards the highs, I would consider that to be pretty positive. Just a sec.
There's the head. Let's see what I got in my kit bag over here for a shoulder. Oh, I guess we could use so many choices. Yeah, just use that. Go back. All right, so what do we got? We got a reverse head and shoulders. Poorly drawn, but that's okay. Head, shoulder, shoulder. Neckline. And most chart purists would bump it up. Just like so. Now, here's the theory on a head and shoulders. If we break this neckline to the upside, we will be looking for what's called a measured move. This is just technical analysis 101. And a measured move means this. from the top of the head. Where's my... Grab my right instrument. All right. Do that again. The distance from the neckline to the top of the head. Okay. The neckline breaks. Technical Analysis 101 says that we'll get a measured move. Sometimes it happens, sometimes it doesn't. Remember, everything works some of the time. Nothing works all the time except the market and methodologies that mirror the market. So a break of this neckline would lead us up to a high in the S&P 500 E-mini Futures around 3176. And I saw the note from Tim when I referenced this a moment ago as the all-time historic high. And thanks for reminding me of that. As we can see, the actual all-time historic high is back here. Right there. Okay? All right. Okay. I have no idea how long John will be on this call. So we've recapped from the concierge standpoint the S&P. Let's take a look at the Dow. All right. Last night's alert for the Dow. And I already gave you guys a chance to grab a screenshot. So the Dow. Oh, the Dow. Consider being long 27,700. Okay, 27,700. The trade to target is 27,760, which is the lowest weekly trading zone for the Dow. Go ahead, John.
Hi. Sorry about that. So, the metals are pulling back a little bit right now as the market's going higher. Really, you know, it's still a bit of a crapshoot before the numbers come out tomorrow. But since this is a fairly subdued dip so far, I think it's kind of encouraging because every one of these dips, the market seems to find its ability to go higher, notwithstanding the the bomb blow up today on that Sage deal. Right. Rest of the stocks are kind of, they're not, I mean, look at Apple. Apple is really, very close to an all-time high. So Microsoft and some of these other stocks, they're still not giving up much ground at all. I've got a feeling the Fed is going to
intervene,
do one more rate cut. Yeah.
Now,
I think that
the last time he spoke, he kind of made it clear that that wasn't the plan anymore, right?
Yeah, well,
it doesn't mean he won't do it. But.
Yeah, if they're going to do what this, what looks, I mean, look, the dollar is kind of starting to tell the story. You can't rule out a stronger dollar, a rally into the end of the year. But right now, the dollar certainly came off a bit here in the last couple of days, and certainly is one step closer to a substantial breakdown. And Trump wants a weaker dollar. He's already said that. So, if, I think another rate cut might seal the deal on that. But I think if there was a final rate cut, it'd be a very powerful rally into the end of the year.
I agree.
So, Yeah.
I agree. And the market is looking for something right now. I mean, that tweet that came out yesterday at 4 a.m. in the morning. I mean, was that even verified? I mean, it got
you
me
mean
to
the one the
thinking.
previous day?
Yeah, when we had that big spike off of
No, it
some
was
tweet.
mostly. I mean, it was mostly just all hot air. Really, it was
Yeah,
speculation.
and I'm surprised there's not a whole lot more of that. I mean, how do they
Yeah,
police
but
that?
what I was saying about, when we went from 2012 to 13,
Uh-huh.
if something came out of the, because these fellas always do stuff behind the scenes, and if something came out that was just, took everybody by surprise, and they announced the signature of a deal or something, the market could really rocket on that. So,
Right. Okay.
and these little corrections are sort of keeping the market from being overbought. And generally, when you're sort of going up the step ladder, it's just like, what did I say about intercept? I said 120. It looks like we just hit it this morning, an hour ago or so. Thanks. And it just doesn't want to quit this stock. It's amazing. It really, and now the financials are starting to perform better. The financials are really strong today, actually. So that's a pretty good sign.
Mm-hmm. Anything else you want to cover?
Well, palladium is at an all-time high again. By the looks of it, still looks like it's almost looks like it's got 22,000 to 2,200 written all over it right now. And I think that platinum, I just watch platinum. If there's sort of I'd kind of try to buy the dips on platinum. That's what I would do. I'm not saying wait for kind of buy each upturn, and one of them might be the one that just keeps going. So, but that is, look at that palladium. I mean, it really looks like it's.
This is a daily.
We've got an outside day there. That's a little bit of could be a bit of a problem, but the way this thing's been going, it's just there must be a tremendous shortage for the price to be going up this much, this so consistently.
Mm-hmm. I agree.
And what we were saying about the intercept and some of these other stocks.
There's an intercept.
Yeah, their revenues are increasing, and they're not making money yet, so there's a lot of risk from that standpoint. But they're going the right way. And look at that. Remember, we highlighted that gap.
Well, there's
that
a great
gap
example.
at 90.
I just showed the guys what a measure. We were just looking at that reverse head and shoulders.
Yeah.
So, guys, there's your head. Okay. And we'll make this a shoulder. And we'll make this a shoulder. Now, the all-important neckline. Okay. So, head, shoulder, shoulder, neckline. Technical Analysis 101 says that when the neckline breaks, as it did here, this is reverse head and shoulders, just like we looked at on the S&P. Now, a measured move here would have only been, measured move would have been from there to there. Well, hang on. Okay. Did it do that? It did. And then it gapped above it the next day and has continued to run. So the S&P has the same kind of formation. Whether we'll break the neckline and whether there'll be follow through or not just remains to be seen.
Yeah, no, it's a good point. Good point. Because we're sort of getting into the time frame now where we could be, this kind of reminded me of a previous period where we actually had I think we had a record of 14 positive Dow closes. It's about the most in history. And, you know, we've been seeing similar kind of action here in this last rally. And what experience tells you is it's not the last rally. You know, when you get a rally off a big correction that we had earlier in the year, and this is like the first rally, you know, you could get another rally of similar kind of magnitude.
12
you know, 10,
daily green candles in a row with that little doji there in the middle.
Yeah.
13 candles, doji. Okay.
Yeah. And we're accelerating now. You know, if we were to get another gap up, you could get a big spike in this stock. And if you push it, squeeze it up a bit so we can see some of the history, you'll see that it's getting up towards an area that it can actually get through and
Yeah.
So,
yeah, the last time it popped above that, it got slapped down pretty good.
Yeah. So, and Madrigal, MDGL, you might want to take a look at that. That's kind of pacing. The reason why the stock is doing so well is because they're kind of becoming the leader in the space.
Yep.
The acknowledged leader. I guess Madrigal thought it was ahead of it when they gapped up last year.
Right.
But now Intercept is in charge, and they're outperforming Madrigal substantially. But you know, this one could just as easily surprise, especially as it gets up towards that. You know, it looks like it wants to go up to about 150. This Madrigal, you know, it might have an acceleration to the upside.
Mm-hmm. No, I can
but,
see that.
I mean, it was kind of crazy the way this thing went up so dramatically and then gave it all up. You know, it's unusual to say the least. You know, I would have thought it would have held up better on such a staggering move like this, you know. And look at where it came from. I mean, that thing really got beaten up.
Yeah, that thing cratered
a few years ago.
It came back.
Yeah.
Okay. Anything else?
No, that's about it. Thanks very much.
Thank you, John.
All right. All the best.
Pleasure as always. Talk to you tomorrow.
Good, thanks.
Bye-bye. All right. On the NQ, Concierge Trade Alert triggered $320 per contract move to the upside. Any of our traders who've earned the right, one at a time, that's the way we do it, to trade 10 contracts, that's a $3,000 move. Not a bad Thursday. And in the grand scheme of things, it's not really a big move. I mean, look at this one candle here. That was that 4 a.m. spike that we were just talking about that came off that unverified, unvetted tweet. So, you know what? Let me talk about this for just a second. And I'm going to relate this to a very real story that happened to a very real person, one of our people. This gentleman took about a $5,000 account. He wrote me a lengthy letter, and he asked me to read it to the audience, and I did. This was a few years ago. It wasn't the most recent flash crash. It was the one before that. It was really kind of a big deal. He had taken a $5,000 account. He had grown it to over $60,000. He had made arrangements based on my advice to take the lion's share of that money and put it into some kind of an instrument that would pay, you know, we didn't even care if it paid any interest. We wanted to protect it. That was the idea. Because in a flash crash, even if you have a physical hard stop in a flash crash, price can rip right through that thing and keep going. His entire account was decimated. He wasn't whining, he wasn't crying, he was sick to his stomach, but he wrote a very nice letter. I've still got it here. I keep everything. I'll dig it out and I'll read it to you guys. He said, Dwayne, I just want you to read this letter to the audience because I don't want anybody else to ever have to go through this. He goes, hey, you know, worse things could happen. This is the guy said, worse things could happen. He said, I still got enough money to go back in. I built that account. I'll build another one, but this time I'll be smart about it. The moral of the story, never keep more in your actual trading account than you need to trade whatever level you've earned the right to trade. If you've earned the right to trade 5 contracts and you only trade the S&P, your margins are 500 during the day session, they're $1,000 at night. Now, I'm not going to even get into what if you hold it over from one session to the next, because that's a different story, and you go to the full margin, okay? So let's say you're going to do some day trading, you're going to do some night trading, and you've earned the right to trade 5 contracts. So at night, you're going to need $5,000 in margin. Of course, you have to have some cushion for drawdowns, stop outs, commissions. I mean, because that's part of the truth about trading. So if you've built your account up, good for you. Maybe you started with 5, you got 10, you got 20, you got 30. Sit with your broker, if your broker's Bert, or whoever your broker is, sit with them and have the discussion with them that I'm having with you right now, and ask them because that's their area of expertise. How much money do you think I should keep in my war chest? That's what I call it. How much money do I need in the war chest? Now, I'm not talking about the country's treasury. Just what do I need to go out and do business with every day at my level? Now, that level is going to continually change as you increase the number of contracts that you trade. However, if you stay on the positive side of the equation, you're going to be adding those additional contracts with profit you earned in the market. You should not have to draw down on this other account that you set up. It's there in case, let's say you've built your account up to 20 grand and you're trading 10, 12, 13 contracts. Okay, you need 20 grand in your war chest. But if something bad happens, the good news is you only lose what's in your war chest. You don't lose your nation's treasury. And that's all the money that you have for the purposes of trading and investing. I hope that makes sense. Again, I'm not an attorney and I'm not an accountant. I don't even play one on TV. Talk to a licensed investment professional, your broker. And let me just say this. When I say talk to your broker, if you're with one of the big houses, the chances are you've never spoken to your broker. You may have spoken to his assistant, or you may have spoken to someone that they've given a fancy title to, right? I love Ameritrade's commercials. They got some great titles, okay? And I'm not making fun of them. They're a fine company. If you do business with Daniels Trading, number one, Michael and I don't make a dime from that. If you open an account with them and you trade with them, we don't get a finder's fee. We don't get a sliver of the commissions every time you put on a trade. Not that that kind of arrangement would be illegal. I mean, people do referrals all the time. But Michael and I decided that in creating something very unique with CFRN, we decided that the broker we recommended had to be someone that we recommended because we felt, from our own personal experience with them, that they were simply the best in the business. That is how we feel about Daniels Trading. That is how we feel about Burton Schlichter. Do they ever screw up, make mistakes? Yeah, they're human, and that's the truth about trading. That's going to happen at the big houses. That's going to happen at the small houses. The difference is, when something goes awry with Daniels Trading or Burton, you can call Bert at 866-928-8255. 3310. And unless he's on the phone or out of the office, he's going to answer it probably by the third ring. He's not going to just shuffle you off to some underling or, some assistant with a fancy title. He's going to help you. Not only is he going to help you with whatever the issue is, when you ask questions about our strategy, about our methodology, guess what? He uses our methodology. He knows it inside out. He's not teaching a class today, but he does teach a class most Thursday afternoons. It's everything you see Michael do in the morning, but in slow-mo. He breaks it down. Because during that class, he's not actually chasing ticks and trades. He has a live chart up with live data flowing, but he's not trying to put on and take off trades. He's trying to help you understand the methodology, the setups, and if you are considering becoming a CFRN partner or passport holder, once you do, that's going to become as important a part of your education as you showing up every morning in the live training room for as long as it takes to learn our core methodology. Because everything you see me do here with these larger time frames each day on the radio show, it's all built on that core methodology. It's like our boot camp. You got to get through boot camp before you can move up and move on. You don't have to come to the live training room every day once you learn the core methodology. You can pop in and out when you feel like it, or when you need help with something. But I'm going to tell you, just the peace of mind it gives a trader knowing that every day from 9:30 to 11:30 you can interact with a professional trader who can help you with whatever issue it is that you're having, unless it concerns legalities and taxes and things that we're not specialists in. We're always going to refer you to that licensed professional, the attorney, the accountant, or the broker. Okay? So, synopsis. Do not keep more money in your war chest than you actually need to go out and do battle today. And I don't like associating the market with war terms. I don't think of the market as my enemy. I think of the market as my business partner. I treat it with dignity. I treat it with respect. I understand the market's knowledge is greater than mine. The market's pockets are much deeper than mine. And our methodology respects the market so much that everything we do is a direct reflection, a mirror image, if you will, of what the market is currently doing. That's where our success comes from. That's where your success can come from. You can spend years and tens of thousands of dollars trying to figure out a way, or let somebody teach you a way to beat the market. That's a battle I don't want to be in ever again. And the good news is I don't have to be. I don't have to wake up with a mindset or, well, I'm going to kill it today. I'm going to nail it today. I'm going to outperform the market today. Go look at all the funds out there. These are the really smart people, not just some joker on the internet. These are the guys with degrees and pedigrees. They went to Harvard and Oxford and all these places. They string together all these numbers, call them algorithms. There's thousands of them out there, tens of thousands. Go look at the short list and see who in the past year outperformed the market. Then take that list and go look at last year's list. You won't find many names on the same list. And then go back another year. You won't find many of those names. Consistently outperforming the market is a very difficult thing to do. Now, you never hear me come on the show and brag to you about how we outperform the market. Because that kind of talk, God loves a humble man. So we don't have to pat ourselves on the back. We don't have to toot our own horn. What we can do, not on a quarterly basis or on an annual basis, but on a daily basis. I come on the show and I show you what's real. This week, just logic, not concierge. Since Sunday night at 6 p.m. Eastern, 32 alerts, 3 never triggered, 2 are still working, 4 of them have been stopped out, 15% of actionable alerts stopped out. Now, if you in your own mind translate that into us outperforming the market, great. If you translate it as us underperforming and that we just kind of suck at this, well, that's okay too. It doesn't really matter to me. What you think of me, it's none of my business. I mean, we all want to be liked, right? But I don't mean that in a snide way. What you take away from this is the truth. The truth about trading. So, however you file it, however you stratify it and collate it and put it together, that's entirely up to you. That's also why we give you a 5-day trial. You get to come in for 5 days with no credit card. You can kick the tires, you can kick me. You get access to the room. We let you use our indicators. I share with you my Concierge Trade Alerts each evening. I send you around the clock alerts. Might be 2 a.m., might be 2 p.m. I send the alerts as opportunity presents. Not before, not after. Most of the logic trades, you will have a minimum of 10 to 15 minutes before you need to pull any triggers. And quite often it will be, several hours. Now, I just showed you a recap of logic for the week. Let me just scroll down. Let me scroll down to this week. Is this it? Oh, this is it. Okay. So the weekly recap that I just shared with you, we're in week 70 right now. Okay. Sunday night, 6 p.m. Eastern. That's when we fired up. You see Mountain Standard Time here, but if you're East Coast, Telegram reads your computer's clock. So whatever time zone you're in, that's the time that's going to show. Okay. S&P, there's Crude, S&P, Crude, more Crude, NQ. Thumbs up, by the way, means that price found the target, and X means it was stopped out. Gold, S&P, Dow, Australian dollar. I'll talk more about that if I have time. S&P, Dow, NQ, Russell, stop out on Crude. Okay, so now we're up to, I believe, Tuesday. Sunday night was the first. Yeah, so now we're up to Tuesday. There's gold, there's Crude, NQ, never triggered, Oh, it triggered, but there was no acceptable stop loss. So, and that's no trade. This one never triggered. This one must still be working. Short the S&P, short the Dow, short the Russell, short the NQ. This one, okay, we hit the target to the tick. Now, when you hit the target to the tick, picture all these people standing in line to get soup, right? There's all these people standing in line to get their order filled. If price doesn't trade through the target, then that means some of the people standing in line didn't get filled. And some did. So that's why we market the way we do. Okay? S&P, Dow, Crude. Now we're up to today, Thursday. S&P, Dow, and still waiting here, looks like, on gold. Now, if your trading journal doesn't look like this, you could. What special talent and ability do our traders have that you don't? They have access to our methodology. They have access to our indicators. They have access to group training every day in live markets. And they have unlimited access to one-on-one mentoring. When you need help, you go to our website, you go to the mentoring page, you find a day and a time that works for you, you book it yourself, and then you and I meet up in an environment much like this, in a go-to meeting room where you can see my charts, we can talk to each other, just like a telephone call. You don't have to type in questions. And I'll spend 45 minutes with you each time, if you need the full 45. Sometimes people they got like a 10-minute thing. Hey, will you look at this trade and help me understand what happened? Sure. I'll dissect trades with you. I'll see, everyone is at a different place on their journey up Trader Mountain. So part of your job is when you sign up for the mentoring session, you're going to type a couple quick notes to me about where you are right now on the journey. Maybe you're having an issue with your stop. Maybe you're having an issue with your target. Whatever it is. This way I'm prepared to customize that mentoring session to whatever issues that you are currently dealing with. I mean, if you're not having any problem with your stops, then I don't want to waste 45 minutes of your time teaching you about stops. I want to work with you in the exact area that you're having an issue. Hopefully we resolve it in that one session, and then I'm going to encourage you to book another session the following week so we can touch base and see if what you learned the week before has straightened that issue out. If it hasn't, we'll go over it again. We'll continue to go over it until you move up the mountain to the next issue. That also gives our traders tremendous peace of mind. Once they become a part of the family, once they become a passport holder, they know that they'll never be alone again as a trader. And let's face it, trading can be a very lonely business. The people around you, unless you are that rare individual, the people around you don't trade. They aren't interested in trading. And the last thing they want to spend Thanksgiving dinner doing is listening to you drone on about something that they don't understand. So not only do you have someone that you can talk to, but you have a group of people you can talk to. Michael and Valerie and I are available for the mentoring sessions, but we also have a Telegram discussion group full of our traders who themselves are all various stages of the journey up Trader Mountain. Chances are, as you begin to read the posts and the discussions, you'll find somebody that, you know, hey, that guy reminds me of me. And you'll maybe message with each other. Maybe you'll build a relationship. Maybe you'll build a friendship. Happens all the time. Daily, practically. So that's who we are. That's what we do. Nothing fancy. Quite simple. Easy to understand. And affordable. I said affordable. And when you become a passport holder, you own our indicator set for life. You have unlimited access to everything we do for life. Now, disclaimer. That's my life or yours, whichever runs out first. And that bell just tolled for somebody. All right. NQ, $320 per contract move to the upside. Let's look at the flip side. Every Concierge Trade Alert has two sides. We don't always see two-sided action in every market every day, but there are days we do. In Q, the short side there, 82.59. Now again, when the alerts come in, what I recommend that all my traders do, go to the charts of the markets that they trade, put the lines in the sand. And until price gets to one of the triggers, you can take a walk, make a sandwich, pet the dog. Live life. No need to sit and stare at the chart every tick. No. You see, we're not doing any business in here. We're waiting for the market to hand us an opportunity. A high probability, low risk opportunity. And when the markets are flat, when the markets are trending sideways, a little bit of opportunity up here. We were able to take advantage of it. If your goal, as we teach in the live training room, is $100 a day per contract, you see, the way we solve the trading equation is not more points, although you're welcome to take as many points as you're capable of out of the market each day. But our very basic philosophy says if you can learn to take $100 per contract per day out of the market, and I said consistently, the S&P, that's 2 points. The Dow, it's 20 points. NQ, 5 points. Russell, 2 points. Crude oil, 10 ticks. The way to promote yourself up the ladder of success is once you earn the right to go live, you go live with one contract in whatever market you choose to trade. And then we want you to increase your account balance by $2,000 before you add a second contract. This way, going forward, every contract you add for your entire trading career after the first one will always be underwritten by profit you yourself actually earned in the market. So when that nosy neighbor or that relative says, yeah, how's that trading business going? You don't have to pound your chest. You can just smile and say, real fine. Thanks for asking. How's the kids? You with me? We're not chest pounders here. We don't brag. God really does love a humble man and a humble woman. And a lot of what you're going to do with us, a lot of what you'll accomplish, it's conversations between you and God and conversations between you and I. Your neighbor really doesn't need to know the fine details of what you're doing or how much money you're making. And I mean, just if you've never made what some would consider a large sum of money, the last thing you want to do is start telling people about how much money you're making. Because you will become the Bank of Dwayne or the Bank of Frank or the Bank of Steve. Everybody's got a need and everybody's got a hand. I'm not saying that you don't. God blesses you. Why? So you can be a blessing to others. But it should be you, God, and the Holy Spirit making the decisions who you're going to bless with God's blessing. Okay? I learned this early on. Not everyone that used to walk into my office when I had 50 employees, not every one of my employees that walked into my office asking for my help, not all of them were sent by God. And that was a real eye-opener to me when the Holy Spirit finally convinced me of this. And I'm so naive. I'm like, oh, well, who does it? Who did send him? The other guy, the enemy. See, when the enemy sees that you're starting to serve God and your cup's starting to run over, you have the ability now to bless other believers. The enemy will send people to you with great tales of woe, because that's how he can get you. You're generous to a fault. Just know that everyone who comes to you for help, for financial assistance, God didn't send them. Now, he will send some, and you need to be sensitive to that. Whenever I would go into a counseling session, I would always close my eyes for just a couple seconds. It's all it takes. And I would pray, Father, by the power of your Spirit, give me the words to say and help me make the right decision that honors you. End of story. Oh, man, I'm ready to rock and roll. I have no degree in counseling or economics. So far above my pay grade and most of the stuff I've done in these past few years. But nothing is above his pay grade. He knows it all because he created it all. And as long as he's got my back, I'm not afraid to try anything. Now, I won't try flying an airplane until somebody actually teaches me. Just like you shouldn't try trading futures live until somebody teaches you. Otherwise, you're throwing away his money. As believers, we're all called to be good stewards of whatever God has placed under our stewardship. You don't have to get an education with me. I won't insult you by telling you I'm the only guy out there that can teach you how to trade. No. You will have to beat the brush to find someone who really will devote their time and resources to truly training you and mentoring you after the check clears the bank. But there's other people out there. I don't actually know any of them, but I'm sure they're out there. And I'm sure you probably do know some of them. So, wherever you get your education, just please make sure you get one. And make sure it's legitimate. You've heard me say it so many times before, and I'll say it again. Whatever I talk to you about, whatever I teach you, don't just believe it because I'm a nice guy or terribly good looking. No. You should vet everything I teach you. Whatever theory, whatever when I tell you that important prices and important areas are almost always tested, you probably have heard it so many doggone times on the radio show you're sick of it, so you're just going to go ahead and believe it. Please don't. Please don't. Get a list from Val of important prices, important numbers over the past year. She got all that stuff filed away somewhere. And then go sit with charts over the weekend. Prove me right or prove me wrong. If you'll put forth the time and effort, you'll get to the answer. And whatever that answer is, you will own that. You will learn to think it and say it with the same conviction that you hear in my voice. Because it's not just something some joker said on the internet. It's true because you know it's true. And you know what? That applies not just to trading, but that applies to everything in life. When your pastor gets up on Sunday morning in the pulpit, lays a sermon on you, you listen, you take it in, you have great respect for him, and you're not trying to find fault. No. Whatever notes you took, whatever handouts they give you, you go home and over the course of the next week, you study what you were taught. And then by the time you show up in church next Sunday, you should own that knowledge. You should be in lockstep with him, on the same page. If you'll do that, your respect for, see, whoever you sit under, whoever's your pastor, whoever's your spiritual father, mentor, whatever you call it, that's not by accident. That's a divine appointment. Treat it as such. And as you take the knowledge that that pastor imparts to you each Sunday morning, and over the course of the week, you study it, and you know, there's a difference between reading your Bible and studying the Bible. Learn to use concordances. There's lots of tools out there for studying the Word today that didn't exist years ago. A lot of the stuff existed in book form. I remember at 37, sitting on my bed with TBN on the TV, because at 37, you've heard the story, my wife and I had turned our lives around, and boy, I was on fire. So I always had TBN on, or K-Love, and I'd have my Bible out, and I'd have all these other reference books spread out all over the bed. I didn't know what I was doing, but I just knew I was supposed to be doing it. And I wanted to do it because I had a hunger. I had a thirst for knowledge, his knowledge. He said he'd give me all I can handle. Bring it on. Bring it on. Today, my goodness, all of that stuff, all those heavy books I had to lug around, you put all that stuff on a thumb drive. Oh, I bought a 32 gig of, where it's right here. I went to Walgreens to get something else, and I walked out with a 32 gigabyte SanDisk thumb drive. $9.99. It said the regular retail price was $29.99, but I guess this was my Black Friday special or something. Haven't even had a chance to use it yet, but you can do a lot with 32 gigs. That's 8,000 songs. True story. All right. I know you're tired of me. I'm going to get out of here. Let's go to the good word for the day. What do you say? What will we talk about today? Well, let's find out. It's Still checking. Oh yeah, we started yesterday a mini-series, Discovering God's Will. Maybe you've figured out what God's will is for your life. We should have all been born with some toll-free number tattooed on our left butt cheek, right? Unless you're right-handed. Anyway, we don't come with that kind of a instruction manual. We do come with we do have an instruction manual. It's called the Bible, Basic Instructions Before Leaving Earth, right? So you may be 22 or 72. You may or may not have discovered your divine purpose. Now, if you haven't, it's probably because you haven't looked. But if you've looked and still aren't sure, don't give up. Maybe what we talk about yesterday, if you missed it, today if you're listening, and tomorrow when we wrap it, yeah, maybe it'll help. Romans 12:2. That you may prove what is that good and acceptable and perfect will of God. Romans 12:2. The full verse says, do not be conformed to this world, but be transformed by the renewing of your mind, that you may prove what is that good and acceptable and perfect will of God. Now, for a redeemed child of God, nothing in life should be more important than discovering and doing His will. You got 4 options here. Number 1, you can just choose to remain ignorant of it. Chances are this isn't you, or you wouldn't be listening to this radio program. Clearly, you've shown you have a desire to know God's will for your life. And the good news, if you go read Isaiah 30:21, it says He'll help you find it. Isaiah 30:21. And your ears shall hear a word behind you saying, this is the way. Walk in it. When you turn to the right or when you turn to the left. Second option available, you can know it and just simply choose to disobey it. Jonah, remember Jonah? Jonah knew God's will, but he ran from it and ended up in the biggest storm of his life. What was his problem? Well, bottom line is he just didn't like the assignment that God gave him. Now, is your problem that you know God's will, but you just don't like it? Option number 3. You can know it, but you're just willing to settle for less. The truth is, you can sing in the choir, you can serve on church committees, yet deep in your heart, you know that you're settling for less than the best, which is God's will for your life. Option number 4. This is the good one. You can settle for nothing less than God's will. Now, there are moments when God's will seems too difficult, too prolonged, maybe even unrewarding in the moment in the flesh. Your own ideas seem so much easier, quicker, more enjoyable. But in the end, you find that His plan was better than yours. That's a great song, by the way. His way is always better. And there will never be an exception to this rule. His way is the better way. So, you may as well decide right here, right now, that from now on, you're going to yield to God's will for your life. Make that decision today if you haven't already made it. And you know what? There's power in this. Grab a pen, grab a piece of paper. You remember those, right? Look in your desk drawer, and you're bound to have a Post-it note in there somewhere. You know, it's all digital today. There's just something about holding that number 2 lead pencil or your fancy pen that you dip in the, your quill that you dip in the inkwell. Get something to write with. This is important. You ready? Make an agreement with God. A contract, if you will. God, from this day forward, I'm going to be listening. I'm going to be listening for that small, still voice of the Holy Spirit. You are my shepherd. I recognize your voice. And when I hear it, God, from this day forward, I'm going to do whatever you tell me to do. And I'm actually going to do it your way. Because I believe your way is the better way, the best way. And from this day forward, I promise you, you will be living your best life every day. Sign that thing. Put your John Hancock on it. And I know this is old-fashioned and old-timey too, like a number 2 lead pencil. If your knees permit it, why don't you get out on your knees? Physically humble yourself before the King of Kings, the Lord of Lords. And agree with the psalmist in Psalm 40, verse 8. I delight to do your will, O my God. Your law is within my heart. And that's our good word for the day. Today's Thursday. That means we have a workshop tonight. It is a closed-door meeting, only for partners and passport holders. If your status is still civilian, if you're still on the outside looking in with your nose pressed up against the window, we could fix that. Call Valerie, 949-42-EMINI, or send her an email, support@cfrn.net. We also have a help desk in Telegram, so if you use Telegram, just go to the help desk and say, Miss Valerie, could I get that spec sheet and that price sheet? Because I got a decision to make this afternoon. And based on the decision that you made, I'll see you in the workshop tonight. Thanks again for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
You're listening to CFRN, the Christian Financial Radio Network.